pesos per month 10 years ago without investing it, you would easily have 600,000 pesos today. Today, you're looking forward to your new car, new house, or a dream vacation. Because of inflation, your purchasing power for that 600,000 pesos would actually be worth a lot less today. But if you invested your money in a mutual fund, not only would you have maintained your money's purchasing power, your money would be worth more today. For information, visit the FAMI website.
Hello and welcome everyone. The effects of the COVID-19 pandemic are still being felt far and wide. This year, we are positively hoping that these times will shift for a better things to come now that vaccines are gradually being made available. First Metro Asset brings you information on what you need to know and useful resources to help you navigate your investment goals. I am your host, Mary Love Alex, and I'm here with Mr. Edser Trinidad, First Vice President and Head of Investment and Research of First Metro Asset. Hello, and thank you for being with us today, Sir Edser.
Hello, good afternoon.
Good afternoon. On today's webinar entitled Opportunities in the Sea of Uncertainties, Sir Edser will provide us with an overview of 2021, the road ahead. Let's now hear it from one of the industry's experts, borrowing a line from our President, Ms. Karen Roa. What do you see in your crystal ball, Sir Edser? Thank you.
Hi, good afternoon to all. Let me just share you my presentation. I think so far what we had seen that there has been a lot of turbulence that occurred during the first couple of weeks of this year. And basically, there are a lot of questions whether do we expect that there should be some recovery down the road, whether should be more focusing more on the fixed income, or maybe we should be investing solely on equities. Hopefully, this presentation should provide you with some guidance of what to expect for 2021. I think for 2021, it will be basically be in two phases. For the first half, as you can see in my title, it will be rough and tumble because of the following reasons. I think just like in last year, the first half will be volatile due to a lack of clear positive catalysts that can drive some positive sentiment on the market. Some of the concerns that will drag both the equities market, equities and fixed income markets for first half includes elevated food prices brought by last year's strong typhoon and the outbreak of ASF on our livestock. This will keep inflation rate elevated, at least for first half. Basically, there's also some concerns of the emergence of UK variant in the country, and which the fear is it can increase the infection rate here in the country, and a concerns that of a potential slower than expected first quarter GDP. However, I think despite of those concerns, we do not expect the equities market to decline like we had seen in 2020. First of all, we believe that the rise in COVID cases may no longer be as worse as what we had seen last year. And right now, foreign exposure in the Philippines is are on all-time low. I think the last number that we check, it's the average ownership rate level of foreign investors in our Philippine names is just running at about 20%. So for second half, we expect that there should be a rebound or a recovery phase We see a healthy recovery by second half, and we expect that the equities market on a year-on-year basis will finally be able to post a growth on a year-on-year basis, driven by the following. First of all, we expect that there should be start of a distribution of vaccine, which should lead to further relaxation of restrictions, implementation and deployment of government infrastructure projects. Please bear in mind that we're basically at the onset of the election period, which can also push spending, especially on the government's infrastructure side, as they want to keep their promises, um, and that basically because of this election. We also expect that the implementation of Create Law, which cuts corporate income tax rate from 35%, from 30% to 25% will be fully implemented, and that should give a boost to the corporate's earnings. But the bottom line here is, as you have seen that there's basically an increased number of vaccine. Therefore, you see a lifting of restrictions. Second, I expect that inflation will finally be under control by second half. And lastly, these fiscal incentives that the government will be providing should improve consumer confidence, which can lead to higher spending. And the bottom line of that should reflect on a better corporate earnings for most of the Philippine companies. And lastly, basically because of those reasons, we are basically biased for equity funds. So as you can see here in this chart, it shows you um, the stock market, the Philippine Stock Exchange Index. As you can see, after crashing to an all-time, well, to a very deep fall in March of 2020, the market has steadily risen by about a little over 50%. And the start of the year, we've seen some positive, I think, some encouraging signs. But however, after that, the market has been on a downward trend, and right now they've closed below 6.9. Um, and basically, foreign investors are still on a net outflow basis. And just to give you some sort of idea in terms of foreign participation, in the past, during pre-COVID, usually foreign participation is about 55 to 60%. Now it's down to about 20%. So in terms of relative performance vis-a-vis with our neighbors, this is as of January 22. We're basically lagging behind in terms of equity performance on the year-to-date basis as of January 22, as we're basically down by 1.3% on local currency terms, and about 1.40%, 46% on USD terms. And even on the fixed income market, we've seen that there has been some sort of, um, um, in terms of the decline in interest rates, we've seen a slowdown. So here, basically, this is the yield curve during pre-ECQ. That's basically March 11 of last year. As you can see, this is basically the interest rates per per uh, per security. So as you can see here, as of March 11 of 2020, you see 20-year bonds hovering about 4.59. Now, when the government has initiated the lockdown, it has worsened because because of the uncertainties in the economy, people or investors tend to sell their long-term uh, bonds and basically have moved toward the shorter duration. And this is the reason why interest rates from the 2-year bonds until as high as the 25-year bonds have gone up considerably relative to the ECQ. However, due to the monetary policies or monetary easing or monetary stimulus that the central bank or the BSP had embarked, such as cutting the policy rate. We've seen interest rates have gone down significantly um, from the ECQ level. However, we've noticed that there's basically because of some concerns about our economy's growth as a whole, people tend to shy on the long end. Um, this is basically the behavior when a economy's growth in the long run is basically in doubt or in question, and that prompted investors to just go seek a shorter duration um, securities or debt papers. So as you can see, while the whole curve had declined as compared to the ECQ peak, the interest rates on the 20 to 20 or up from 10-year or rather 20 to 25-year debt papers or bonds have been higher, or the rate of decline has been slower as compared to the shorter duration papers. So even let's say during this year, we've seen that interest rates have been flat, and we believe that the fall in interest rates have already reached its bottom. So we expect that the decline in interest rates will not be um, as significant as what we had seen in 2020. So this is basically the end 2020 interest rate curve as what I have shown on the previous slide. And if you are going to compare this as of January 22, things are pretty unchanged. Although there has been some movement between the 6 months until the 2-year papers. However, if you look at the other interest duration or other securities, they're either flat or they've already seen a slight decline. So we expect that this will, I think, remain the case for the rest of the year. We expect that there should be some further decline in terms of interest rates, but we do not expect that the rate of decline will be as significant as what we had seen in 2020. So even on the US treasuries, as you can see here, because of the developments in the US, because of the in terms of the US elections, the Democratic Party won the election in the US. That basically signals that the winning the Democratic Party or Biden administration shall and they got control of both the Senate and Congress. That means that all the fiscal stimulus program that the Biden administration uh, will be facing a much, shall I say, more helpful or more cooperative legislators. So due to this, there has been a growing um, um outlook that because of a higher stimulus in the US, inflation might increase. And this is the reason why from this interest rate curve, it has gone up because of the expectations of the higher fiscal stimulus. It will create a inflationary effect. and that will lead to expectations of a higher interest interest rates as their central bank or as the Fed will try to contain or try to control the higher inflation by either relaxing some further monetary stimulus on the U.S. economy. And this is basically is quite important because even our U.S. denominated papers are also being affected by what's happening in the U.S. So in terms of peso currency or our currencies relative to um, other currencies in the region, last year the Philippines is one of the best performing currencies, um, which we've seen our currency went to a level of about 48 pesos to a dollar. Now we've seen some slight depreciation, but we do not expect that the peso will depreciate significantly for this year. In terms of the higher inflation, this is also another concern that is basically being closely monitored. As you can see, because of the higher food prices, the inflation rate has been on the high side. And this is also one of the key things that both the equities and the fixed income market is monitoring if this trend will continue. So in terms of, in concerns of a higher, COVID infection due to the holiday season, there has been some notable increases. However, um, thankfully, the expected increase is not as worse as everyone had feared. So I think this is a good news. I think early on during January, um, this is one of the major concerns that the equities market has been closely monitoring. There has been an increase in terms of the number of infection, but thankfully, it is not as worse as what we're expecting. So the question is, do we see the same drop as what we had seen in March 2020? For me, I think it's unlikely. First of all, as I mentioned, in terms of one of the major key reasons why the market has been very weak during January is the expectation of a certain resurgence of COVID infections. Yes, there has been some increase in the number of infections, but it's not as worse as everyone had feared. In addition, if you are going to look at the positivity rate, it remains low. In fact, I think the trend is still on a declining trend. So in addition, basically this is a cumulative number, and as you can see here at the cumulative positivity rate, it remains stable to some indications of a continued decline. The next is basically in terms of the number of people that are being unemployed. And as you can see here, we've reached to as high as almost 18% in terms of our unemployment rate. But when the government has started to ease restrictions, we've seen this number to go down to the latest information at about 8.7%. So I think while this is basically a major concern, but as I mentioned, we've already seen that the infection rate has eased, and they basically the vaccine is basically just around the corner. So there's basically a higher probability that in the coming months, and even the government has mentioned this, that we may start to see some further easing in terms of restrictions. So as we continue to ease the restrictions in terms of the mobility, in terms of the people of the age, the minimum age where people can go to the malls will start to to be adjusted or eased, then we expect to see that this number will continue to fall. In addition, another quite surprising data is remittances, because about 400,000 of our kababayans who are working abroad have lost their jobs because of the pandemic. There's basically a major concern that one of our key pillars of growth, which is remittances, may be badly affected. But so far, during the past couple of months, we haven't seen any some sort of a sharp decline. In fact, there has been, some during months a notable increase in terms of the money that are being sent here in the Philippines. And so basically, this is an encouraging sign. Another key important number that we data that we really need to look out for is consumer confidence. As I mentioned in the previous presentation, our economy is about 60 to 70% consumption driven. Uh, Basically, as you can see here, one of the key things that dampened consumer confidence is because of the pandemic. So, as we now have a vaccine that will be rolled out, hopefully by Feb, that is the earliest expected, or this month, this is the earliest expectation. Although I had to, I think, be interpersonally, I expect that there might be some delays in terms of the rollout of vaccination program. However, despite of delays, definitely by second half, we'll see a full implementation of the government's vaccination program. So as you can see, once a vaccination program already is in place, then people will start to, have more confidence in going out, as the government will start to ease the restrictions. And I I expect that once we've started to see some easing in terms of restrictions, plus the vaccine is now being implemented, then I expect that the confidence level should improve. And basically, this is Google mobility report, and as you can see here, during the time that during December, during the holiday season, we've seen a spike in terms of the number of people going to the groceries retail section. Um, uh, so basically, if there's a need to go out, or let's say there's a celebration, people will basically will go out. However, as because you have a very low confidence level about, the fear of, especially with this news during the time that the UK variant has already entered the Philippines, then definitely there has been some further concerns, and that has, as you can see here, there's basically a decline again in terms of the people moving about. So, um, this is basically a function of the confidence in our economy. If this is the critical, if the vaccine will finally be, I think, arrive here in the Philippines and now be applied, um, even let's say in a certain city or certain areas, then you have to expect that this number or this trend will improve significantly, and that should basically drive up your consumption, and that can also translate to better earnings by second half. Another thing that has basically, quite a another indicator is in terms of mobility is our passenger count. So as you can see here, this is the latest data that we're able to get. The passenger count has, or the traveling in the Philippines, even in the domestic area, has been very um, has gone down significantly. This is because of a lot of restrictions. Although the Department of Tourism had already opened a number of areas where people can can go on a holiday, but you still have that confidence, and going in those tourist destination is still is a bit of shall I say, a challenge, because they have a lot of requirements that they have to fill up. But once vaccine is already been distributed, and uh, restrictions will be lifted, you have to expect that this number should increase significantly. So in terms of our reserves, basically our reserves right now have continued to increase. It has increased to as high as almost 14 months in terms of um, uh, number of months, in terms of debt cover. Plus in terms of the black here is in terms of number of months, if import of our import requirement. So as you can see here, it's now almost 1 year equivalent of imports. This data is also encouraging, considering that you now have some confidence that the risk of our peso's depreciation, sharp depreciation, can be muted, can easily be controlled by our central bank, because they have enough dollar reserves, to protect um, our currency from any abrupt depreciation relative to the US dollar. So if you are also going to look at the broker forecast, you see a much more, I think, positive outlook. And this is the current median estimate in terms of the PSE target. Our last survey, we made this last October. So during October, their PSE level target is about 7578. Now, this has increased in terms of estimate to about 78. In terms of EPS growth, although a lot of analysts are expecting that EPS growth may slow down from 39 to about 37. However, this is a function of, I think, they're looking at a much more subdued growth in first half, and they're expecting a strong growth by second half. So this is the reason why for the year EPS growth, they've slightly cut their estimates from 39% growth to about 37% growth for 2021. As for GDP, they're looking at GDP growth of about 7% for 2021 and about 6.2% for 2022. So in terms of our valuation, in terms of the PE level, we're currently slightly below the 10-year average, about 17.9. Currently, we're doing at about closely about 17.6 to 17.7. So in a way, the valuation here in the country is a bit reasonable, considering that it trades below the 10-year historic average of about 17.9 times. And another thing that can slow down the further deterioration in our market is in terms of foreign ownership. As of September 20, we're basically at an average of about 23.4%, and this is basically an all-time low. This is more than 10 years. It's a 10-year low of about 23.4. So while I think that, like what we had seen last Friday, there was basically a sharp decline because of a foreign investor sold their exposure in the Philippines, and we've seen a drop of about 3%. But as what you had seen last Monday, there was also basically a strong rebound. So we expect that may continue to happen, but we don't expect that the same level of sustained decline as what we had seen in March 2020 will occur, considering that in terms of foreign ownership, um, we're basically now at an all-time low. So thank you, and I'm opening the floor for any questions.
Thank you, Sir Edser. That's plenty of food for an investor's thought. Okay, we'll now proceed and take some time to answer some questions from our clients. These are questions that were sent earlier. Okay, let me start with this question. What strategies or policies should the government implement to attract more investors to drive up the Philippine economy? Sir Edser, you're on mute.
I think so far the government is on the right track of trying to improve the attractiveness of our country to investments. First of all, by investing in infrastructure, I think that's one of our key weakness relative vis-a-vis to our neighbors. Second, this create bill or the create it's now on bicameral conference, and I think it will be ratified by both Senate and Congress in a couple of days or weeks. I think that's a good step forward. That gives us that will improve our competitiveness in terms of the tax rate related to our neighbors. In addition, I think the other key thing here is we need to have a consistent policy, a consistent and a uniform policy. I think that's one area that we really need to improve. Because if you are going to compare us with other countries, yeah, the foreign investors would like stability in terms of the policies, and I think that's one key thing that here that we need to improve. However, I think what we're doing right now is on the right. It's on the right direction in attracting our investors.
And that's good to hear, sir. Okay, next question is, with the rise of the e-commerce industry, how will this affect a developing country like ours, like Philippines?
Oh, I think the development of e-commerce is both it's positive for a developing country. First of all, this also would I think create a level playing field, especially for SMEs, because with e-commerce, one of your key I think challenges if you're basically a brick and mortar player is the lack of branch network, the lack of reach. But with e-commerce, um, that will basically give you a level playing field because even a small player can sell,
Go online.
yeah, to
Mhm.
someone who is basically, let's say, if you're based in here, Manila, you can sell your product down in Mindanao.
Mhm.
Basically, that's a good development considering, unlike in the past, if you're a small player, you don't have any access to this new e-commerce platform,
Mhm.
then it will very be difficult for you to sell your wares
Mhm. Mhm.
in Mindanao.
Yeah.
For me, it's this is a basically a good development, and unfortunately, I think we're still a long way to go in terms of usage. We still have a lot of things to improve in our infrastructure, in our payment platform,
Mhm.
or lastly, in terms of the consumer behavior.
Mhm.
I think a big number of our consumers are still
Mhm.
wary of using digital payments
Mhm.
as a
Mhm.
mode of payment. So here in the Philippines, as you can see, the cash on delivery method is still is the more
Mhm.
preferred
Mhm.
uh, mode of payment.
Mhm. There are still more offline consumers, so to speak. Okay. Next question, sir, is as an investor, how can I properly navigate the tumultuous and volatile Philippine market? So, what do you advise them, Sir Edser?
Yeah, it is really a tumultuous environment, and admittedly, sometimes it is it's very challenging right now. But I think, as I told you, I don't think I think for first half there's still there still will be a lot of volatility that will happen.
Mm-hmm.
But I think by second half, as what we had seen even in last year,
Mm-hmm.
there's basically a good trajectory of growth.
Mm-hmm.
I think so much for this year, considering that the vaccine is already now, just around the corner.
Yes.
There might be some, I think, some sort of disappointment in terms of the timetable.
Mm-hmm.
The timetable for distribution might extend or might get delayed, but I
Mm-hmm.
think at the bottom end, by second half, definitely, um, the vaccination program will now be fully implemented. So that basically gives me a lot of confidence. So in these times of uncertainty, as what basically we've been saying, that there's an opportunity
Mm-hmm.
uh, in this sea of uncertainties.
Mm-hmm.
So as an investor, I would rather, let's say, for any dips in the market, I would invest. I would do some averaging in terms of my investing.
Mm-hmm. All right. Okay. Next question is with the fluctuations in the market, are we going to sell or buy more or come back later when everything will be stable?
If you're not yet invested,
Mm-hmm.
I would buy during market dips.
Mm-hmm.
If you are invested, just be patient. Okay. If you have the money, this is where the opportunity to average down.
Mm-hmm.
If you don't have the money, if you're already fully invested, I would stay.
Oh.
As I think this is the first time that we're going to see that there will be a year-on-year growth.
Mm-hmm. Very good. All right. Okay, last question, sir. There are mounting worries that GameStop squeeze will reach Philippine market. Is this something that is possible to happen here in the Philippines?
Um, I think that this is the emergence of retail investors.
Mm-hmm.
Um, is not unique here in the Philippines. Basically, it's across the global, it's across the world, and
Mm-hmm.
I think that's also what happened in the U.S., where GameStop
Mm-hmm.
had been one of the darlings among the retail investors. Um, I believe that um, we're not going to face the same problem as what the U.S. might face
Mm-hmm.
due to the value reasons. First of all, um, in terms of participation on the number of names that the retail investors are investing, um, in terms of institutional holdings, it's minimal.
Mm-hmm.
Unlike in the US, like GameStop, um, and it has even institutions hold the stock, hold the name, and a lot of the institutions that are holding GameStop are hedge funds. In the US, short selling is allowed, meaning even though you don't have an existing shares, you can sell the stock
Mm-hmm.
and hoping that the value of that stock will fall, and then you can buy back at a lower price. And basically, you'll be earning a spread. And in order to do that, is in the US they allow stock lending, so you can lend to a, let's say, an insurance company, or who only holds the stock for long term and
Mm-hmm.
have no intention of selling. Then they can lend it to, let's say, a hedge fund, for a certain interest for a fee.
Mm.
So that gives me, the that allows the hedge funds to, short the stock and just buy it back.
Mm.
But the problem with that is because of what's happened, because of the retail investors have rode on on the name on the game on GameStop, the share
Mm.
price moved up. So for those that are short, had shorted the name GameStop,
Mm.
and they're now losing money.
Mm.
So in order um, to to recover or to lessen their losses,
Mm.
so they have to buy the stock.
Mm.
So instead of buying at a low, they were buying at a higher
Mm.
price. So that pushes the price further. So
Mm.
there's basically a concern that uh, GameStop's price or bubble may burst, and it
Mm.
can affect even institutional funds. But
Mm.
here in the Philippines, um, most of the stocks that the local investors are now or have been are focusing on are basically some names that local institutions don't hold.
Mm.
Um, Now, the reason why local institutions don't hold the stock is it's not because of the lack of fundamentals, but because of the liquidity or because of the size of the company, which prevents institutions to buy the name. So
Mm.
I think, those are the reasons why I think it's unlikely that we may be seeing or may be facing the same problem as what the US
Mm.
may be facing in the future.
Okay. All right. That's good to hear, sir. At least it's something less to worry about. Okay. Sir Edser, is there anything else you want to add or a final message before we wrap up?
I think um, at at the end of the day, definitely among us, among our listeners right now, our viewers, um, there might be some questions. So, you know, uh, looking at the current situation, things looks gloomy, di ba?
Mm.
Or
Mm.
parang in Tagalog, parang walang pag-asa, di
Mm.
ba? However, I think this is the same situation that what we faced last year, di ba?
Mm.
Um, the market went down to about 4.6,
Mm.
but at 4.6, it went up by more than 50%.
Mm.
So for those that have braved the market when they went at 4.6, so look at the returns that they've enjoyed.
Mm.
So I think this year, um, while it looks um, like a depressing market,
Mm.
because we've been lagging everyone, but I think um, it our situation is not as worse as
Mm.
what we have been facing last year.
Mm.
So that's the bottom line. The vaccine is already here, and the government's really bent on spending because last
Mm.
year they were lagging, and
Mm.
until the early part or latter part of last year when they started to ease some restrictions,
Mm.
the deployment of the budget is still lagging behind, and
Mm.
they are aware of that. So, and mind you, election season is already just around the
Here,
corner.
yes.
So the government has to, I think, live up or has to meet all their targets because they need to prove something
Mm.
uh, to the voters.
Mm. Okay.
So that gives me, I think, the confidence that um, for this year should be better as compared to last year.
I would have to agree, sir. This is the year of the vaccine as well. All
Yes.
right. Okay. So thank you, Sir Edser, again for sharing your expertise For questions we weren't able to address during the FB Live, due to lack of time, we will respond to you via DM. We hope these insights will help you feel more confident in your investment decisions. Should you have further questions, please send us a message at fami@firstmetro.com.ph, and don't forget to follow our social media channels at First Metro Asset. Scan the QR code shown on your screen so you get updates via Viber public group. Stay in good health, enjoy the rest of your afternoon, and thank you for watching.
Picture yourself 10 years from now. If you set aside 5,000 pesos per month 10 years ago without investing it, you would easily have 600,000 pesos today. Today, you're looking forward to your new car, new house, or a dream vacation. Because of inflation, your purchasing power for that 600,000 pesos would actually be worth a lot less today. But if you invested your money in a mutual fund, not only would you have maintained your money's purchasing power, your money would be worth more today. For information, visit the FAMI website.